Okay, so what you are looking at now is the SGX fund flow. Just a small announcement before I start. I have posted earlier that for our scanner, right, in our Patreon, we will be now catering to the catering to the both the Hong Kong and the US market now lah. So if you look at the latest scanner that I posted here on the 24th October, right, you will be able to see both the US and the Hong Kong market inside this particular scanner already. So this is the SG scanner. So you can look at the bottom, there's a caption there, SG scanner. Then after that you have this is the Hong Kong scanner, and this is the result for the US scanner. So you are able to access to both the US and the Hong Kong market already. So hopefully that's give us much more option, much more stuff to trade lah. Not just stick to Singapore market. Mainly because as you can see for last week in Singapore market, there's only 3 counters that shows up, and all these 3 counters, right? I don't really see much potential in them. Even for Saring Tech, who has 32% weekly performance, right? We are somewhat at the resistance ready lah. So we probably won't be trading much of the Singapore stock for the coming week. Okay, so let's get back to the fund flow. So this is the XGX fund flow. This is for entire Singapore market, not just the STI constituent itself. So as I mentioned previous week, for those who are not here the previous week, right, I mentioned that both the institutional, the blue line, and the retail, the red line, they tend to move in unison, in the same direction. Only until the recent of the COVID-19 event, we see a divergence in the retail and the institute fund flow lah. But recently, what we can see is that they are starting to move in unison again. And not only that, they are moving towards the positive side. So for the institutional fund flow, right, the blue color line, right, they are slowly inching upwards. And you can see from the cumulative chart also, the downward slope on the institute, right, they are slowly sort of becoming horizontal, and hopefully in the next few weeks they will be going up lah. So once the institutional funds are going up, right, we will see Singapore market most likely to recover. Most likely to recover. Now let's look at the STI index fund flow itself for those 30 counters that are within the STI constituent. So we can also see a similar pattern. Excuse me. So so we can also see a similar pattern as the XGX fund flow, and we can see that they start to move up to the positive range already lah. They are start to sort of shifting upwards, and you can see for the institutional also, it is sort of flattening out, and hopefully in the next few weeks, once this trends up, right, we will see STI itself start to recover lah. So as of moment right now, I wouldn't expect anyone to jump in yet, mainly because the STI index itself is still looking quite weak, still stuck within the trench itself. So let's go through some of the counters lah. So first, what I have here is the Straits Time Index, our Singapore STI market. So this is on a monthly time frame, extremely long-term time frame. So what you can see is the uptrend line is somewhat still intact here. So we sort of hit the trend line during the March period here, when we have that huge price downwards, but price seems to be supported and recover. But as of right now, right, you can see that for the past 6 months, price still have been hovering at this support level here. This support level is previously established by during the June 2011 and around March February 2015. So we are now sort of lingering around this. So until we have quite a decisive up move, right, we don't want to make any kind of assumption yet, because what can happen is that it can make another trip down to retest the trend line and retest the support before it start to come up. The reason why it is stuck there so long, right, for about 6 months, right, is that there are still a lot of seller present in the market. So if there are too many seller present, right, the smart money, they can actually purposely push the price down to sort of whip all the weak holders out lah, in order for them to push upwards. So as of right now, don't try to like go all in, go big into any of the STI counter. It is still a dangerous period until we can see price move above at least 2700 lah. So previously you can see around around June period, right? Yeah, around June period when market recover a bit, a lot of people got caught here because once we reach this resistance level, you can see all these candle cluster here, right? Once price reach there, right, there's a lot of sellers start to come in and price start to go back down, and now we are at sideways again. So if you are buying into the market right now, there is a high chance that you will be stuck sideways and you will be stuck here for quite some time lah. So we already see that price is sideways. So don't expect to buy and then keep asking yourself why am I being stuck sideways? You are stuck sideways because the market is sideways. Just because you buy into the stock market doesn't mean it will immediately go up. Or just because it is hanging around the support, it will immediately go up. It will still be there for quite some time. So this is a monthly chart. Let's go back into daily chart for the counters. Yeah, let me delete all my drawings. Okay, so when we comes into the daily chart, right, we are still sort of within this red color zone. You will see that price is having a hard time to go up, and you can see for the whole of last week, right, it is just stagnant. It is not moving anything, which is why previously last week I have maintained that try not to buy into any of the STI constituent because you will most likely be stuck. And let's look at the three banks. So firstly, DBS. Actually, surprisingly, right, all the three banks, they are somewhat doing fine. They are not going down, they are not going up, but they are sort of lingering at the resistance level. So this is DBS, right? You can see it is it is still sort of lingering here. So the reason why this price is lingering there is that the market is testing for seller to is testing to see whether sellers are coming in. So it is just hanging there to sort of baiting the market, sort of telling them that are there any seller coming in? Are there any seller coming in? So if next week if there's not much seller coming in, right, price can actually go up. But if there are much more seller coming in, you will see price start to go down. So as of right now, right, you should not buy into DBS at all until you see a decisive breakout, a very decisive breakout, something like this kind of pattern. You wouldn't want to buy into small movement like this kind of inch up a bit. You wouldn't want to buy into that kind of price movement, but rather wait for this kind of very decisive price movement upward. Something like that. I either that, or if price start to go back down, right, then you simply don't look at the counter anymore lah. But because since price is at the resistance level, right, there's a higher chance for price to go back down than going up lah. So still I will stay away from all the banks at the moment. If you go to UOB is also doing somewhat slightly okay. Last week it goes up a bit, but you can see the presence of seller coming in on this candle, this like a pin bar, because previously we have a pin bar here. So once price reach that area, right, you can see sellers start to come in also. And the thing is that on this pin bar, the volume itself is quite high, so there's quite a significant seller coming in. So unless price is able to sort of break through like this, right, you wouldn't want to buy yet, because it could just stagnant there for a while and start to come back down to test the support level there. Next, OCBC. OCBC is also somewhat like UOB. It is even worse because the movement here is the slope here is not really very steep. It is like go up one day, go down one day, go up one day, go down one day. So if you trade into this kind of price movement, right, I tell you, you probably have a hard time sleeping lah, because one day go up, you think that price going up, but the next day it sort of undo the previous day candle, which you can see here lah. So this kind of price movement is not very good to trade, so I will stay away from OCBC also. So what are the few counters that were doing quite well from last week is that you can see Union Gas, which I presented last week. It is doing somewhat okay. So actually, earlier part of this week, right, price retrace a bit somewhere here. So if you manage to get around 0.425, 0.430, right, you are actually very lucky. You're probably in quite some profit right now. So you just need to hold on to your stock. But if you did not manage to enter last week, right, when price retrace, you must be daring to enter, because if you don't enter at price retrace, you only enter here, right? Then in the next few weeks, price start to sideways, you will be holding it at the higher price, and you'll be holding it at a loss until price start to break out. So it is not a very very comfortable thing to do lah. At least when you manage to buy at the retrace, when you buy at the support, even if price start to sideways, right, you are still positive. At least you are holding it. And if you don't want to hold anymore, you want to chase other counter, right? At least you can exit it with a bit of profit rather than you buy at the top and then stuck there lah. But regardless how you buy, right, your stop loss have to be 0.400. So in all my analysis posts, there will be a stop loss given. Follow the stop loss level strictly, because they are chosen with they are chosen extremely carefully, and there are strategic reasons behind why these levels are chosen. It is not simply chosen because oh, I can lose $200, so I choose that. I can lose $300, so I choose this level. No, it is not chosen like that. It is chosen in a strategic manner. So you need to calculate yourself what is the amount of share that you should buy in order not to lose so much. So do follow the stop loss strictly. The next one, the next counter, Bukit Sembawang. Okay, so Bukit Sembawang actually, if you all see DBS, right, they posted some positive report on Bukit Sembawang. Like I think they bought a new land or new property or something like that. And because of that news, right, you see that huge price movement upwards. And this volume is a very significant volume, very high, very high. And the candle itself is a very bullish candle also lah. So what you can do is for the next week, right, you can actually ride this momentum at least to the resistance level at 3.79, 3.8 level here lah. Of course, if possible, you might want to wait for price to retrace a bit and then buy the price going up lah. So your stop loss should be at 3.45. But do remember that this counter, it has this counter, it has been in a downtrend for very, very long. It has been a downtrend for very, very long already. So the long position here is actually a counter trend trade. So regardless, DBS say buy lah, whoever say buy, right, do realize that it is a counter trend trade. So because it is counter trend, it can be that this momentum, after rally a bit, it can die off easily, mainly because there are a lot of people stuck here. There are a lot of people stuck at the top. So the moment they see price go up, right, they will take the opportunity to sell down. So when you got some profit, right, try to take profit or try to lock in some profit by shifting your SL. Don't try to like, okay, I'm going to throw all my money in and hold very long term because DBS says so. Because it is very easy for price to simply go all the way back down. That's why the stop loss there is important. Okay, next one, Intel Cement. Intel Cement is a very mega penny counter, extremely small penny counter. So be very careful when you are trading penny counter. Also enter small amount can already, don't need to enter very big. This Intel Cement came up on my scanner for this particular week. You can actually see, okay, it is not here lah, but it is in the weekly scanner. So let me go to weekly. So Intel Cement actually came out on my weekly scanner lah, and it does seems that price is looking quite bullish. So it broke out of the resistance, and actually this candle itself is very, very bullish lah. So if you are looking to buy this counter, the stop loss will be around 0.048. But make sure don't buy too much because price can actually stagnate here a bit before it start to go up. So when you buy in, right, make sure you can hold for quite some time. Also, don't expect the moment you buy the next day price go up. if it does happen, then it is a good thing, like it's a bonus lah. So after you buy, right, as long as price doesn't hit your stop loss, you don't prematurely exit, because this is a very, seems like a very good uptrend counter, and it has the opportunity to go to maybe even 10 cent, that kind of level lah. So because it's a many super penny counter, right, from 60 cent go to 10 cent is about 40% profit already. So there is a very big return on investment on this kind of penny counter. The next one, Sarin Tech. Okay, so Sarin Tech shows up on my scanner. The thing is, it shows up slightly late. So at the current price, right, it is not worth chasing, mainly because there's a lot of resistance here. And the moment price go up, hit the resistance now, it will start to come back down already. But rather, what you should do is you can actually watch this counter, wait for a retracement, to around 30 cent level. And once they hit 30 cent level, right, you can actually buy in and take the right up to the resistance lah. So at least if you wait for retrace, you get this amount of profit. If you doesn't wait for retrace, you are only getting small amount of profit. So for this, do not chase. It's good to wait for the retracement to buy in. Okay, so I fast very tricky for last week, right? You can see one day moved down a lot, then the other day price recover instantly, and now you're probably not sure what to do. So for for iFast, right? If you have not been like inside the trade since this point, right? Currently right now price is slightly high lah. But the thing is, price high, right? It can definitely go higher because the momentum is there. So you should always take advantage of the momentum when it is there lah, because especially in an uptrend counter that is like in its all-time high lah, so it can become something like Top Glove or Reverse Stone, that kind of price movement lah, or even UG Healthcare from like 20 cent become like $3-4 like that. So if you are looking to buy into this, right, try not to buy in the middle. Currently price is in the middle between resistance and support, so you either buy the breakthrough of the support, or you wait for price to breakthrough of the resistance, or you wait for the price to come back down to support a bit. Then once price retraces to support, right, you can actually buy this. So the stop loss is at 2.80. So this is the one counter that if you have not entered yet, you can choose to enter. If you are already in this trade from previously, you can choose to enter another small entry to compound your profits. So the next one is Franken. So Franken, I mentioned last week already. My initial buy call for Franken came around here, 0.96 like that. And of course, last week I mentioned that you should take profit already because we are quite near the resistance, and now its price is coming back down. So most likely price is going to retest the support again. So once we reach the support again, we will see if there is another buying opportunity or not, so that we can sort of keep playing this range lah, until the support is broken or the resistance get broken up. So I hope nobody go and chase this counter at somewhere here lah, because the buy call came at extremely low price, and last week price was already quite high up. The next one is High P. So Franken and High P call came about the same time. So High P, the call was around here, 1.1, 1.13 like that, this candle lah. So now price has hit the resistance level also, but unlike High P, right, it is still hanging around. Unlike Franken, it is still hanging around there. So you would not want to buy at current stage already, because it can, like Franken, it can simply come back down. So if you are still holding, right, I do recommend you to take some of the profit. You can leave the rest inside there in case price start to break out, but you can sort of take a bit of the profit now lah, because it's at the resistance and there's a chance that it can come back down. Next one, ASPEN. So ASPEN last week, I think last week I made a call around this level. So because this is a very penny counter, right, and I managed to TP around 2.6 lah, which is the first TP price given in my Patreon post. Let's look at it. Okay, so ASPEN hit TP. Okay, the ASPEN analysis is here. Yeah, so it came around here. So first TP actually at 235, the second TP was at 26. So we actually hit the second TP already lah. So it's good to follow some of the trade that shows up there. And now price is coming back down. So as price is coming back down, right? It is not really like going to be a reversal like that. So you can still enter back at around 0.210, but keep your stop loss to 0.185. Okay, so there's a chance for second entry, and I do believe that this 270 resistance can be broken and price can go up to 0.315. But you should not blindly enter. Wait for price retracement and make sure that you don't buy too much. Make sure you adhere to the stop loss that is given. Okay, so these are the potential counter for Singapore market coming week lah. So while I have gone through the Singapore market, right, I'm slowly venturing into US and Hong Kong stock also. So let's go through some of the US and Hong Kong counters that shows up in my scanner for this weekend. So the first one is of course US Snapchat. Okay, Snapchat, the moment you look at this, right, price has gone extremely up already. So it is very hard to make any kind of analysis on this counter because it is at all-time high lah. So one way you can play this, right, I will say it is the only way to play this right now is to you can buy at whatever the market price is, but your stop loss should be below this candle. You are buying because you saw this bullish candle, so you should place your stop loss below this candle. So if the price sort of go below this candle, right, meaning the reason why you buy into this counter is no longer valid. So you should place your stop loss below this below the candle lah. So because the momentum is still very good, right, there's a high chance that it can continue to shoot further upwards lah. So I personally wouldn't mind taking a small position in this and try to catch this momentum. Second, KODAK size. So this is like Snapchat also, and it has broken through the resistance at this level already. So it is not like going very extremely high also. So same thing with Snapchat. The only way to play this counter is of course you can chase the current price, but your stop loss should be at least below the resistance around 82. Price stop loss should be around $80 level like that. $80 level like that. Or if you do not wish to chase, right, you can wait for price to retrace a bit and you can buy the retracement and place your stop loss as $80. But judging from the candle and the volume, right, it seems that the momentum and the bullishness is very strong. So there is quite a good chance that maybe it might not retrace back. So you can buy a bit and then place your stop loss at 80 cents. If it does retrace, you buy some more and of course place your stop loss at 80 cents also lah. That's how I will play this chart. Okay, and the last US stock that shows up was MYTRIP Limited. I'm not sure what this counter is. It says here is consumer service lah. So this counter, I think it is much more better than Snapchat and KODAK, mainly because those two counters have run up very high, and it is quite dangerous to chase. So if you want like a much more not so dangerous one, right, maybe you can choose this option, mainly because it broke out of the resistance currently here. So if you buy in at the current price, right, your stop loss should be around below the resistance, around $19 like that. But if you wait for the retracement to $20, you can afford to place your stop loss slightly lower, around $18 like that. So $18 is a much safer stop loss compared to $90 lah. But both you are able to make it work lah. So the TP is around $25. So once again, right, how I will play this counter is that I will buy a bit at the current market price. If it goes up, I'll just TP straight. But if it retrace, I will buy some more at $20 so that when it goes back up, I will have more lots lah. Now I will have more profits. So these are the US counter. So let's go through some of the Hong Kong counter also. Actually, Hong Kong counter quite interesting. There's a lot of very explosive movement that you don't really see in the Singapore market lah. Okay, so the first Hong Kong counter is Nimbus Holding. So currently it is sort of breaking out, but it's still hanging around at the resistance level, but I believe it has the potential to break out further. So if you decide to chase this counter, your stop loss should be at 0.435, this level here, 0.435. So if you chase, right, you can definitely go for a TP around 0.545 or even 0.660. It has quite a good chance. Don't worry about remembering all this. I will post up the video shortly after and you can look through it again lah. Okay. Next one will be okay. I seriously don't know how to pronounce this lah. Melior Health. Okay, so same thing. It has a huge breakout and it has break through the resistance. So if you chase the current price, you can place your stop loss at 340. Or likewise, if you want to follow my kind of entry strategy, you can buy a bit here, and then if price retrace, buy some more at 0.360. But whichever price you buy, right, stop loss is at 340. So the TP level that you can aim for is around 0.465 like that. So this one I believe also has a very good potential. The next one is Sing Point Holding. So Sing Point Holding, it broke through the resistance here. It had this resistance has been there for quite some time already, like about 1 year already lah. So right now it has finally broke through the resistance, right? So if you chase this counter, your stop loss should be below the resistance around 2.15. So whether you buy here or you want to wait for retracement, whatever, stop loss should be at 2.15, and you can aim for the TP around 2.80 level. Also, it does look very promising considering that it have broke through a very tough resistance that it wasn't able to break through for quite some time, for 1 year. And of course, the very last counter is Asia Infotech. So Asia Infotech, you can see from the weekly charts. Let's look at the weekly chart. You can see somewhere here, price goes sideways for quite some time. There's a very obvious resistance, but price break through the resistance, and now it came back down to retest the resistance as a support. So now the resistance has become a support level already. So now you can buy into this extremely bullish candle with a very high volume. You can buy into this counter, place your stop loss around 11.1. Of course, if you wait for retrace, I think for this, you should definitely wait for the retrace at around at least 12.1 or maybe 11.7 so that you can TP around 13.0 and 13.7. And of course, when you TP also, you don't need to TP completely. You can actually leave a few shares behind in case price continue to shoot upward. It seems like there's a high possibility for this counter to shoot upward lah. Okay, so this is the end of my analysis and some of the counters that I am looking at for the coming weeks. There's actually quite a lot of them. So to summarize, for Singapore market, there isn't really much. The only thing that I'm still holding on to Singapore market is all the leftover from Franken and Hype. I still have a few shares that I haven't TP yet. I have TP most of it already. I am the only freshly entered stock that I have is ASPEN. So ASPEN, I have also TP because last week hit my TP already. So the only one true counter I'm still holding in Singapore stock is Union Gas. So Union Gas, I entered, I think I entered quite early, sometime around here like that. My stop loss is here. So I'm still holding on to Union Gas, and that seems like the only bullish counter so far lah. So this is the only counter that I'm holding. If you are in the gambling mode, if you are in a very risky, dangerous gambling mode, you can actually go for Intel Cement that I mentioned earlier just now. It does look like there's a good chance to go to 1.0 lah. So you can play this also. So these are the only two Singapore counters that I'm looking at. And to summarize the US market, we have Snapchat, we have KODAK Science, and we have MYTRIP. So among these three, I will choose to play MYTRIP mainly because KODAK and Snapchat, even though they are extremely bullish, like they have run so far, and I am quite scared to chase fast moving counter. You can gamble a bit if you feel like it, but personally for me, I'm quite scared to chase this kind of extremely fast moving counter. So for Hong Kong, for all the Hong Kong counters that I went through, all four of them seems quite a good potential. You can try to look for entry next Monday. They are Namesum Holding, Melior Health, SingPoint Holding, and last one is Asia Infotech. So we have come to the end of the analysis. I will post up the video shortly in about 10 to 15 minutes. And I do hope next week you all are able to make some money despite the current sluggish market lah. So thank you all for coming and have a good night.